Now, the Arise News Channel team of reporters, correspondents, and producers are boots on the ground across Nigeria today for the coverage of the first day of the 10-day planned protest against the country's crunching socio-economic environment, as well as what the protesters described as poor fiscal governance. Take a listen.
Any form of violence or anything, as we can see, but the issues are general. You know, there are things we can't pretend about. There's hunger, excruciating issues of hike in fuel price, and the related issues that is affecting, the cost of living, making it very high. But I keep talking to them in their cells and differently, the solution to the problem is not in the protest. We just have to dialogue. We have to constructively and continually engage, so that the youth population, especially here, can be part of that productive solution. The major problem is that we are still a country that is underproducing. That's a major problem. So almost everything is import dependent, including the oil, the petroleum, for which we're buying for an exorbitant price that is affecting every other thing. So as a government here in Bayelsa State, we can relate with the reality. It's true that people are going through a lot, you understand? But the solution to it is not in the protest on the road, especially now that protest is assuming the dimension of violence, as we have seen in other places. So it's not what we produce, because at the end of the day, it's the poor that will even suffer more. So we don't need to suffer more. We don't need to add to this current suffering.
If someone who is doing palliative to Lagosian as a case study, what about people in Edo? What about people in Oshogbo? What about people in the northern state of this country? As of today, there's a lot of crash outing in the north. It's not about someone who bringing out palliative now. This is a uniformed uprising. Hunger. There is this saying in Yoruba language that said, I didn't know you will interpret that to me at this junction. As at now, there's no anything the government of a state want to do. The onus rose on Bola Ahmed Tinubu. He put a lot of shenanigans in his government. On the day of your arrival, he said subsidy gone. No matter how the trailer of goods and commodity that the government of the day want to rule, is it reaching to the doorstep of the masses?
My name is Comrade Mustafa Abubakar. I am from Chukwu zone. So I am standing here purposely to express my sadness on what happened here in Nigeria, and most especially in Chukwu. Our people were killing massively at all the times. At least per day at Chukwu we are missing almost about 10 to 20 people who were killed. Almost about the population where we observed that in Chukwu almost about 20 people are killed each day. 25 people are going barbantly in the bush. So we are here to demonstrate our sadness, to show that our Nigerians are in hunger. Our people are killing massively at all the time. So we are here to show that our government that we are here purposely to inform the world that our people are killing. We are here representing the Chukwu. We are here representing the Nigerians. We are here representing our younger ones.
The fuel, the diesel, the food you are buying, the house rent, everything is too hard. That is the reason why we come out here. Please, the government and the president to talk about it. Please, we need that.
All right, now let's take the protest on the street to the market street with my guest, Johnson Chukwu, the Group CEO at Carry Asset Management. Thank you for connecting into the show tonight, sir. We appreciate it.
Thank you, Boston, for having me. Good evening.
Well, now, what was the thinking of the market in the weeks and the days leading up to today's 1st of August, scheduled for these nationwide protests?
I think the market has been in a state of kind of uncertainty, kind of suspense. Market operators wish that the strike does not hold. Unfortunately, we have no way of influencing whether it would hold or not. So we have waited with kind of an apprehensive attitude towards the protests. And as you can see, today the protest started and the market went down by 0.42%. That will show you, the last time we discussed, when you asked me if the market is a nod or insensitive, I think it was Rotu that asked those questions, to the general development of the economy. I said no. The market responds to the outlook of the economy. And I will tell you, stock prices actually mirror the outlook of the economy. So as we speak today, there are still a lot of suspense. People are worried which direction the protest will take, whether the protest will end as a peaceful protest or it could spill out of control. And that's why the market investors are investing cautiously. Despite the fact that you had more gainers than losers, we had 22 gainers against 19 losers. But the impact of the losers because of their capitalization far outweighed the impact of the gainers. And we saw a market that declined by 42 basis points.
Interestingly, the protests that started today was anchored on socioeconomic hardships in Nigeria. In what segments of the market can you see this reflection on how tough the country's business environment really is?
Bosin, the truth is that virtually every segment of the business, the country's business ecosystem is affected, starting from the consumer goods. And the consumer goods are the sector we always thought was the bellwether in any economy. You always have a saying that whatever happens, people will eat food, people will eat basic things. But as it stands today, the consumer goods sector is badly affected. If you look at the likes of the brewery, alcoholic brewery sector, most of them are reporting losses. International Brewery just published its account, they reported a loss. We know Guinness is exiting the country because of inclement business environment. So, and then you look at the banking industry. The banking industry is dealing with a deluge of policy pronouncements that are impacting negatively on that sector. Look at even the telecommunications sector. We have attacked this week, and some of them had to shut down their outlets because Nigerians were protesting that their lines were bad because they didn't have the NIN or whatever. If you go further, virtually every sector, the transport sector will be affected. The education sector, of course, good thing, the education sector is mostly on holidays, so they may not have so much impact. But if this subsists, many families may not be able to, because we're dealing with a cost of living crisis. We're living with a situation where many households can afford 3 square meals in a day. Their household income has been eroded by inflation. If you look at the food inflation, about 40.87%, then it means that within the last 1 year, the average Nigerian household can only afford 50% of the volume of food they used to eat previously. And that will mean that certainly if your income has not increased by that percentage, that inflation has eroded your income, the purchasing power, then your standard of living would have worsened. So it's going to it's virtually affecting every sector of the economy. I don't think any sector is insulated. Maybe even if you talk about the oil and gas sector, maybe the upstream sector, where they are producing mostly from the deep offshore assets, maybe that may be on the only sector. But of course, that sector is also already faced with a lot of challenges of breach of pipelines, crude stealing, and what have you.
So I was talking about the numbers, and I was just looking at the consumer goods, industrial goods. We look at the Dangote cement. It looks like the whole issue being protested against reflects in the earnings. I'm sure we have the second quarter, first half of the year numbers coming through. What are you seeing those numbers that speak to the fact that things are not really easy for companies and some of these folks you find on the street could as well be employees, whatever, those who supply raw materials, whatever it is, to the companies that are on the exchange, for example, and they're trying to see how things go.
Yeah, if you look at those sector, the industrial sector, the consumer goods sector, and virtually every sector, a couple of things are happening to them. You are seeing an increase in their top line, which is turnover, but that increase in turnover is being eroded by increase in cost because inflation is increasing. And even when you see an increase in top line, that is the revenue, it's just because that the value of the pricing of their goods have been adjusted, not in terms of the volume of sales, because volume of sales have collapsed in virtually all these sectors. And then they're dealing with higher energy costs, they are dealing with higher finance costs, and they're dealing with low demand. So that's why if you look at their P&L, their half-year result for those who are published, you've seen a decline in profitability. And as you rightly said, when consumer purchasing power is eroded, then it then means demand for goods and services will be affected. And then for those who provide input to these businesses, because their volume of production has declined, the demand for input would have also declined. So the average SME who is providing input to a manufacturing outlet will also find that the demand for his input would have declined at a time when the cost of living has gone up. The price he pays for every good and service, including transportation, has gone up. So, and that's why, as we speak today, virtually every segment of the economy is affected. Virtually every Nigerian is affected in one way or the other, irrespective of your level of income. And we are dealing with a fundamental existential issue, which is when you are dealing with a cost of living crisis that is so pervasive that even the middle class in the economy are said to have been wiped out.
Well, how much of the protest happening today is being priced into the various financial assets trading here in Nigeria? You mentioned about the stock market today. What about the international debt market, for example? What numbers are you seeing today?
I think the market, like I said, it's quite apprehensive of how this protest will end. If you look at beyond the equity market that went down by 42 basis points, we saw virtually all of the 12 Nigerian issued Eurobond instruments that traded today that had movement in prices. 10 of them were declines in prices and increase in year, which means investors are pricing in a higher level of risk in the evaluation of Nigerian Eurobond instruments. And that's why you're seeing decline in prices and an increase in yield. Of the 12 that traded that had price movement, 10 declined, only 2 improved marginally in terms of prices. If you look at the FX market, the parallel market rate remained stable. But then we saw an appreciation in the NAFEX window. Of course, now NAFEX window has to deal with a lot of other factors. It could deal with the fact that there is improved CBN supply without a commensurate increase in demand because a lot of people are working remotely. And maybe importers are not certain to demand for FX today because they don't know the outlook for their products or the demand for their products. So the major thing you have to look at, you look at the equity market movement. I had said the equity market went down. You look at the Eurobond market. So what are foreign investors saying about your risk? And we saw foreign investors or investors in our dollar-denominated instrument voting with their feet. And those are indications how the market is pricing the protests.
Okay, but this protest is happening against the backdrop of at least 6 banks now floating billions of shares to invest in the public. Give me your outlook on these bank offers when folks that have been asked to subscribe to these shares, whether public offer or so, mostly public offer, by the way, also, are on the streets.
I think it's a tough call for the banks. I always say that the banks didn't come to market willingly. They were compelled by changes in policy, central bank policy on their capital base that they made them to come to the market. At the same time, they are being buffeted by several policy pronouncements by the central bank that seem to not to support capitalism. As you speak, about 6 or 7 of the banks are in the market. If you sum up the amount of the money they want to raise, it would be above 3 trillion naira. At a time when the central bank and the DMO, the federal government had withdrawn about 20 trillion naira from the economy in the past 7 months. So the banks are coming to raise about 3 trillion naira or more, and they all come at the same time. Also, bear in mind that the central bank is sucking up liquidity that would have ordinarily have gone to these equity instruments. At the last auction of treasury bills, last Wednesday, the 364-day instrument was sold at 22.1%. The 182-day instrument was sold at 19.5%, while the 91-day instrument was sold at 17.5%. That is to discourage, if you look at the logical economic reasoning, to discourage investors from investing in equities and actually prefer to invest in fixed income instruments. If you buy a federal government, which is called what you call risk-free instrument at 22.1% discounted rate, you are talking about a yield of more than 26%. So the question you always ask yourself, if I have to take this money, invest this money in equity instrument, am I going to get a return that is better than a 26% or 27% on a risk-free instrument whose price value with capital, where I'm not exposed to capital depreciation or capital appreciation? Then you're looking at, can I get a capital appreciation of that volume or dividend yield that will compensate for the return I'm getting on federal government instruments? So the central bank is not helping matters. They increased the MPR to 26.75%, increased the asymmetric corridor to plus 5 minus 100 basis points, plus 500 and minus 100 basis points. And these are, if you ask me, they are policies that will incentivize investors to underweight their portfolios in equities and overweight them in fixed income instruments. At the same time, you're pushing the banks to raise the additional capital. So I think the banks are in a tough assignment in this capital raising at this point in time. I believe the central bank wants it to succeed. It has to tone down some of these very adverse contractionary policies, which has also been worsened by the federal government, the executive arm's decision to tax the bank's earnings from exchange gains, what they call profits from realized exchange gains, not minding the fact that the banks will also suffer losses from write-off of loans that cannot be paid because the naira devalued.
A very interesting time. Of course, we appreciate your perspectives of the financial markets on Nigeria's protests that started today across parts of the country. Thank you so much, Justin Chukwu, the Group CEO at Takari Asset Management.